computer. So today I am joined by Philip Zapacosta with Strategic Wealth Preservation. Welcome and thank you for taking the time, Phil, to speak with me again. I have lots of questions for you. So thank you for joining me.
Thanks, Marianne. I'm happy to be back here again.
Okay, so when I am meeting with clients regarding precious metal purchasing, there are some questions that come up repeatedly. So I wanted to throw all these questions at you and get your response. First of all, the storage of silver and gold. What is the rate of storage, and does it vary from vault to vault depending on the country that one has their holding?
Yeah, so with Strategic Wealth Preservation, we have one account with one world access. So they have access to all of our vault locations. And we have two tiers of pricing. So the pricing, the first tier is below $250,000 total holdings value. And the second tier is once a client's holdings exceeds $250,000, and that's at all locations for a single account. So once the client has $250,000, gold, platinum, and palladium and rhodium are all stored at 0.5% per annum. And silver at all locations except for the Cayman Islands is at 0.75% of the market value per annum. And for Cayman, because it's a higher cost jurisdiction for us to operate out of, our storage fees are slightly higher on silver at 1.25% per annum.
Okay. What about if you have less than 250,000?
Well, then clients are at 0.95% at all locations except for Cayman for silver, and it remains at 1.25% in Cayman, and it's at 0.7% on gold, platinum, palladium, and rhodium.
Okay, so for gold, it's 0.5% or 0.7%, and for silver, it's 1.25% across the board.
Yes, in Cayman and at the other locations, it's 0.95%, and it goes down to 0.75% when a client's holdings exceed 250,000.
All right, so ultimately someone should avoid holding silver in the Caymans. It's better to be elsewhere, any of your other vaults. And while we're on the topic of vaults, maybe you can share with me where you do have vaults or arrangements with companies to store precious metals.
Yeah, so because of our relationships in the industry, we've been able to set up strategic partnerships in other locations. So I would just say that a lot of clients still, because of the benefit of being in such a first-class jurisdiction in the Cayman Islands, clients should not be deterred by the extra 0.5% per annum to store their silver there if they're more comfortable having everything under one roof. But in the event they want to have some cost savings or some global diversification, clients can look at storing in jurisdictions like Zurich or Singapore. So we have partnerships in both those locations, as well as Liechtenstein, which is another strategic location because of the privacy laws there. Some clients want to have things sort of a little closer to home. So we do offer 4 locations in the United States, including Miami, Los Angeles, Delaware, and Texas. And we also have a storage facility in Toronto.
How about in Panama?
Panama is not a location that we're storing at the moment. There are quite a lot of complications shipping precious metals in and out of Central and South America due to companies simply not wanting to insure the shipments. So we just avoid that in order to protect our clients' wealth at better situated jurisdictions.
Okay, because this is a question I get a lot about people wanting to have their gold stored in Panama, and you would say be cautious, or what are the main issues? It's the insurance of shipping, or is
I think clients can look into options in Panama if that's important to them to have some diversification there, but they should be mindful that they may be pigeonholed in a way by being situating some of their wealth there. So Panama does have a great banking reputation. So it may be more prudent to consider a banking position there and still keeping the precious metals stored in the Cayman Islands, where it's a better suited jurisdiction and the tax laws are favorable, and the whole landscape there geopolitically is also a better positioning for a client.
Okay. And yeah, I'm not a huge advocate of people having bank accounts. I mean, that used to be the way to go, to have international bank accounts in Switzerland or in Panama. But I'm not really endorsing that, because the underlying fiat currency to me is at risk. So I'm not sure I would be endorsing that, but do you have any thoughts on the matter? Yes.
Well, I think clients have to be mindful of kind of their overall lifestyle trajectory and plans in the upcoming future. And I think a lot of people are creating options for themselves because they're not sure where they want to end up. They're exploring new options they never considered. So flexibility is critical. And I think because of the underlying risks in the global banking system and the respective and in respective jurisdictions such as the United States or Canada, clients are definitely at this time storing their wealth in precious metals in order to be less exposed to the banking system. That being said, it's not so common for people to trade in precious metals in some of the Central and South American jurisdictions, especially for foreign citizens who don't necessarily have residency yet or citizenship in those locations. So they still will have to use banking. It's just don't expose yourself for long periods of time in the banking system. Use it as more of a vehicle to be in and out of precious metals. So using it to get funds to our bank account in the United States to purchase metals. And in the same respect, if you want to get some liquidity out, you can sell some metals and receive a bank wire and then withdraw in US dollars or the local currency in order to purchase things or to pay bills on credit cards and stuff that are linked to those accounts. So it's not prudent to leave too much of your wealth in the banks at any given time, but you must still utilize that tool because we're not quite at a place where people are able to barter with metals in every jurisdiction, or are they able to use cryptocurrencies or other methods of payments just yet.
And that may change. And I actually want to touch on that a little bit later. Okay, so going back to the storage of silver and gold, can you explain how the cost is determined? Is it based daily or annual average? How do you come up with that fee?
Yeah, it's a great question because a lot of people have that question. They really want to understand where their money's going and what it's going to cost for them to carry metals, especially if they haven't ever owned precious metals, or maybe they have, but they've never stored them. So the reason people want to look at the storage rates and understand how they are calculated is that they want to understand that quarterly statements are due every 3 months, and they're calculated by the daily spot rate, and it's aggregated over that period of time. So each day, a client's portfolio is valued, and the percentage rate at 1/365th of that annual rate is allocated as a fee, and then it's summed up and invoiced quarterly. So it's based on the market value. So it will fluctuate over time, just so clients understand that.
And then what are the options to pay for storage?
So most clients will leave a little bit of extra funds on account to pay for storage, and that's automatic. So if you can work with your representative at our company, and they will estimate your storage fees for the period of time you want to sort of store it and forget it, and then you can keep cash on account in US dollars with us, and we'll just automatically withdraw it quarterly. Some clients want to use credit cards, so we can provide a secure payment method and a link for them to pay with credit card. Of course, some clients may also decide they're in a profitable position where they may want to sell some of their metals in order to cover storage fees from time to time as well.
Mhm. Okay, so people can keep a deposit or a cash balance with you to kind of cover those fees if they like, held in trust with you.
Yes, and a lot of our clients will sort of use us as a short-term solution for their banking needs. So what I mean is they could send additional funds to leave on account for storage, but they could also leave a greater sum of funds aside to be allocated to a future purchase on a pullback in prices, or if they're in between banking jurisdictions and they don't necessarily have a setup in a location they may be relocating to, they can leave the funds in our corporate bank account and they will have a cash available balance on their client dashboard that they can request at any time to receive as a bank wire to a new bank account in a new jurisdiction.
Okay, perfect. So if someone is keeping a cash balance with you, do they get paid interest?
There's no interest on our banking, so it's really just a short-term solution. So clients should just look at it as an option for them if they're in between locations and they haven't been able to successfully set up banking in a location that they're moving to.
Okay, so it's really an interim measure. Either if someone is exiting funds and waiting to have them wired somewhere, or they're not quite ready to purchase and they have it locked in at a certain price on a precious metal. It's really a holding tank for their funds as an interim measure.
Exactly, because some clients may even want to place what's called a limit order, where they say, Philip, when gold goes down by $50, I want you to allocate, 50,000 and then another 50,000 and so on and so forth. So people could effectively go in increments. And of course that can be scaled up. It could be 500,000 at a time. It's to the client's discretion of how much they want to allocate.
Okay, that's very interesting. Expand on this limit order idea. In the stock market, we did that all the time. Tell me how that works, putting in a limit order on precious metals with you.
Yeah, so because we're really a client-focused company, we have a great team of representatives that will actually be able to, during market hours, execute trades based on limit alerts. So if between 8:30 and 4:30 p.m. Eastern time, if we get an alert at a price level where a client has asked us to allocate a certain amount of funds or to buy a certain quantity of bars, we can actually go ahead and lock it so the client can dollar cost average their overall portfolio and their purchases.
That's very interesting. So could one put a limit order in for, say, a week and say, if gold or silver drops to this level, I would like to make all my purchases at that level. Can you put it out a week, or is it typically in a day, or how does that work?
Yeah, we can select any period of time that the client requests. So it can be a month. It's not limited to a day or a week. And we just have to express, and the client has to be mindful. That's not the same as when you put it in with a stockbroker, because it's not automated. So it is a manual process that our trading desk carries out for our clients. So it will not get locked if it's outside of the Eastern time zone trading hours.
Okay, and what on the sell side as well, you could put limit orders in?
Yeah, absolutely.
Okay, that's very handy to know, to capture the best price on the way out. Maybe reiterate, so the commissions that one pays are on the purchase, not on the sale, is that right?
Yeah, so with precious metals is a little bit different than trading in the sense of there's not technically a commission. How it works is there's a premium charged on top of the spot price. So the spot price fluctuates with the market, and we post this live on our website, which is strategic wealth, swpcayman.com. So that's swpcayman.com. And at the top right-hand corner, clients will see the live spot prices. So the spot ask price will be listed, and then they can see the live product price for a 1 ounce gold bar, for example. And then if they subtract the spot price from the product purchase price, they'll get their premium. They can also, which is very unique, be able to see the sell price. So they can effectively estimate the profitability. And we are always transparent about that. So every product we sell, we list live pricing, both what they can buy it at and what they can sell it at. They just have to be mindful that the buyback price is calculated at a premium or discount to the spot bid price. So it's spot bid price when you're calculating a buyback, and spot ask price when you're calculating a purchase price. So that's how they can calculate their overall profitability. And that's something I can always go into greater detail with each client on a one-on-one basis, so they can understand that for the products they're considering purchasing.
Okay. Now, I heard a guest on the Michael Campbell show last week. I think he is a gold and silver expert, and he said that he often attends the auctions for precious metals. And he said currently silver coins are trading at a 30% premium to spot. What is that all about? And how are you able to buy silver at the spot price or close to the spot price, and yet at the auctions it's trading at a 30% premium?
Well, there's always a higher premium on silver than gold, just so people can manage their expectations, because it is a lower cost metal. It's quite undervalued at the moment. And there is a manufacturing cost that creates the premium. So it's manufacturing, wholesale, and retail margin that creates that premium. So they're justifiable costs. Because we have such an extensive supplier network, we get first selection of products and priority deliveries. So we're able to get products faster than other locations, and we're also able to get lower premiums because of the volume of business that we do with our supplier network.
So if he's at the auction paying a 30% premium on silver coins, what type of premium would someone expect if they're purchasing directly with you?
Well, silver premiums do fluctuate. That's something we can always go through with our clients, but we will also guide them to products that have lower premiums. So I can't speak to at the moment what the premium is on silver coins, only because I don't have the data in front of me. But of course, we can calculate that live anytime, right, and see what the percentage would be. But we would look at guiding clients into products that are closer to 12 or 10%. Usually silver is at 8%. Is a more typical premium, even at a higher demand time. But because of the geopolitical factors, the supply chain bottlenecks, the war happening in the Ukraine, there are legitimate reasons why premiums have gone up. The demand has also gone up because people are concerned and looking for safe haven assets at this time. So that's effectively what's causing the premiums to go up so much. So
in essence, the spot price is not the real price.
No, it's not. No, the spot price is only when you're looking at paper products. Is a different. It's a starting point for the calculation of the purchase price per ounce of a physical precious metal product.
Okay, so right now one would expect to be paying perhaps an 8% premium on silver coins or bars in comparison to the spot price. That's the premium.
Yeah, more so on the yes. So more so on the larger bar. So in a 1,000 ounce bar would be closer to an 8 to 10% premium. But we also would guide clients into 10 and 100 ounce bars rather than coins if they're only looking for an investment or a trade type of a position. Coins are more suitable for clients who want to have some divisibility of the silver and potentially to trade with or make purchases with in a location where they can present silver coins as a method of payment.
I agree. I think of silver coins as better to be holding on your person, whereas the bullion or the bars are better to be stored in the vault, because the silver coins have a practical function in terms of transacting.
That's right, Marianne. It's all about maximizing your profitability. So we want to guide products into getting the tightest total spread. So that means paying the lowest premium up front and guiding them to products that they're going to get the best value when they go to sell it. And we're very well versed on that on our team. So anyone that a potential client may speak to at SWP will be able to answer these questions in great detail.
Okay. Some clients have asked me, why is it a 4 to 6 week delivery on these items? If we're buying them in a given day, why is delivery so long? What's happening there?
It's the same. It's the same variables that are causing the premiums to go up. It's also there is a tighter supply at this point in time. There is a strain on the supply chain. There's a strain on shipping companies. There's a lot of more due diligence required because of the geopolitical risks at the moment in the world. And there's also just simply a high demand. So the client doesn't need to worry about that when they're purchasing with a reputable company. So any dealer that has relationships with suppliers will have the ability to lock in the price. And we when we commit an order to a client at SWP, we're able to actually commit to the price. So when a client locks a trade, even though they may wait up to 6 weeks, they're not going to pay a higher price if the price has gone up. They are guaranteed that product. And we have never in the history of our company, which has been in business for 8 years, by the way, we have never not delivered a client's order.
Can I
have a 100% record.
Can I sell a precious metal before it's delivered?
Actually, you can, yes.
Okay.
If you effectively own it, it's just in transit. So what would happen is we would sell it for you, and then when we would either reroute delivery to one of our suppliers that would buy it back, or we would take it into our own inventory and have it. We carry an inventory as a company as well. So yes, we can do that. So, and we've done that before with, it's something we've done without any hesitation.
Now, you had talked to me about the fact that different locations seem to specialize in different things. For example, Singapore seems to be the epicenter for silver or silver storage. Can you describe to me what vault locations are best for purchasing certain types of precious metals?
Yes, I think that the Cayman Islands, generally speaking, is an excellent jurisdiction to purchase all metals and store all metals. The premiums do come out a little bit higher on the silver because of the cost to import them into the island. It's not like we have a warehouse of silver just we're drawing from locally. We have to import it in once a client orders it. So we're doing our clients' orders basically made to measure that way. So what clients may opt to do is look at other jurisdictions such as Texas, actually, which is the best location to buy and sell silver. It's the most liquid, the lowest premiums, the tightest spreads, and then also it checks the box of lower storage fees. Some clients don't want to necessarily be in the United States, so then I would point them in the direction of Singapore for their silver purchases and storage. So Singapore is a great market for that.
Depending on what country I'm buying the precious metal, the spot price might be different. Is that right?
Yes, and again, in the spirit of full disclosure and transparency, we always post all of this live on our website. So any client can go, even if they haven't signed up for an account yet, just to get comfortable, they can go to swpcayman.com and click on Buy Metals. And when they click Buy Metals, they actually can view live pricing of silver and click a product, and there's a drop-down menu that'll show them the different location premiums so that they can make the best possible selection for themselves.
So do you encourage your clients to buy online, or do you encourage them to pick up the phone?
Well, we offer that service to consult with our clients. So a lot of clients it's their first foray into buying precious metals or offshore storage. We really invite them, to have a call with their representative. So they'll be assigned a one-to-one relationship. But some clients start to get really comfortable and want to start timing their trades. And we actually offer 24/7 trading. So they can buy 24/7 online as well, up to $100,000 per trade. So a lot of clients, once they get familiar with the rep and our company and they have a sense of comfort, they also have the option to purchase online.
And sell online.
Selling is only executed from in the Eastern trading hours with a representative. So because we're gonna work on your behalf to get you the best possible buyback. So it's always prudent for a client to call in for when they're ready to sell. They can set a limit order that then their representative can during market hours execute it for them as well, if they've given previous instructions.
Okay, now, one thing that really perplexes me is that I understand that gold, paper gold, dictates the price, the spot price. And we're talking about physical gold. So how is it if there is, 60 to 100 ounces of paper gold for every 1 ounce of physical gold? How is it that the spot price, how are you able to buy gold at the spot price based on the paper gold, when to me, there's a disparity there in my mind of 60 to 100 times. Why is that not playing itself out in the market? How are you able to get your hands on that physical gold so cheaply when the price seems distorted, artificial in a sense?
Well, that's a great observation, and shows your knowledge of what's going on, because not everyone really understands that there's a paper market and a physical market. But there's interplay between the two markets, and I don't think that individual investors in precious metals should get too caught up in how it affects the price. They have to kind of look at it as two parts of the same pie. What's most important to understand is, why would you buy physical instead of paper? Mm-hmm. And the whole point is, it's a store of value. So you want to actually own the underlying asset yourself. Mm-hmm. And when you're buying with strategic wealth preservation, we are, as I had mentioned earlier, buying, making a custom order and physically allocating and segregating that within our vault network. So wherever you choose to store it, you have your own bin that is under your account number, that you own that, and your storage contract with us dictates that you are the sole owner of those assets. So if there is ever a correct by large institutions, banks, and so forth, that strategies essentially, but at the end of the day, we can never expect as individual investors to affect the market the way they can. We just need to be mindful of I'm not sure.
Bill, are you still there?